Investors' interest in sustainable investing has risen sharply in recent years, as they have been met with a growing number of sustainable investment products. However, selecting a suitable investment fund has not become easier. The increased supply simply means more work and time to make a sound choice. And at the same time, not all sustainable investment funds are as sustainable as the fund houses claim. So, how do we arrive at a suitable sustainable investment product? And what are the top sustainable global equity funds? If that excites you, then be sure to stick around till the end to find out. What's up, guys? Welcome back to a brand new video on this channel. In today's video, we shall be discussing the top 3 sustainable global equity funds. By the end of the video, you should have known the best global funds to invest in and how exactly they are evaluated. If you're not, make sure to subscribe to this channel and turn on notifications to get updates whenever we post. Now let's get straight into the video. But before that, isn't it a good practice just to bring you to terms with the basics of this kind of fund? Well, a sustainable global equity fund involves buying shares for the long term in companies that show attractive investment features and sustainable business practices. The fund houses then manage your portfolio by balancing various companies to ensure their portfolio is profitable, same as how mutual funds work. Now, as a result of the existence of many sustainable investment products, 2 methods have been developed to help investors make informed choices before investing. The first one involves the use of different labels. In this method, several countries, including Belgium, France, and Luxembourg, came together to help investors distinguish sustainable products. They identified sustainability labels several years ago, which are used as a basis for identifying sustainable products. As a way of standardizing the industry, in March 2021, the European regulations tapped from the Sustainable Finance Disclosure Regulation, or SFDR, were added to the labels. According to these EU regulations, managers must indicate whether and how environmental, social, and governance ESG is integrated into the investment process. If they claim so, then this must be substantiated. Well, as much as that may sound like a solution, but in practice, fund houses appear to interpret the rules quite differently. And this has led to a fairly large disparity in sustainability classifications of the funds. The second method is the use of the Morningstar ESG Commitment Level tool. As a way of helping investors with the tool for assessing fund sustainability, Morningstar introduced the Morningstar ESG Commitment Level late last year. So, what does it involve? Well, this new qualitative measure helps investors better understand how environmental, social, and governance factors influence investment strategies. At the same time, it enables them to know which funds and assets managers are committed to achieving the environmental, social, and corporate governance results that best align with investors' values. This tool is also used by Morningstar analysts to make their estimations. By so doing, they get to know the intention and the commitment of asset managers, as well as the strategies that incorporate ESG factors into their investment processes and organizations. Maybe you're asking, but has Morningstar ESG Commitment Level tool been used to evaluate funds and fund houses that exist? Oh, yes. Since the launch of this tool, analysts have evaluated 71 fund houses and 467 funds around the world. Of the 467 funds evaluated, only 24 received a Morningstar ESG commitment level of leader or higher ratings. Another 33 funds received an advanced score. Meanwhile, 94 funds achieved a basic rating, and no fewer than 316 funds received Lowe's ESG commitment level. Now, that is a surprising revelation. These figures include both conventional and sustainable funds. Nevertheless, they sound a warning to sustainable investors to exercise caution and be selective when choosing a suitable fund. Now, having understood how sustainable equity funds are evaluated, we present the top 3 global equity funds. These are funds that have been assigned by Morningstar ESG commitment level of advanced or leader. Ready for the countdown? Well, keep watching till the end to know what we have for number 1. At number 3, we've AXAWF Global Factors Sustainable Equity Fund. This fund is managed by Rosenberg, a subsidiary of AXAIM. The company has been providing systemic equity portfolios since the mid 1980s. It was one of the first quantitative groups that fully integrate non financial data such as ESG into the portfolios. It launched the AXA fund in 2013, which is currently rated with a Morningstar ESG commitment level of advanced. This fund is currently trading at slightly above $322, representing a 1.3% rise in value for the last 24 hours. Its top holdings are held in Apple Company. The ESG score used in rating this fund is based on more than 100 criteria. This framework scores more than 7,000 companies in developed and emerging markets between 0 and 10 based on a 6-factor methodology. The 14-person analytical team focuses on the areas of material importance. AXA's primary objective is to offer a growth fund with most of its asset allocation concentrated in stocks. Looking at the output, and we get to realize that the fund has a material impact on portfolio weightings, as one of the targets is a 60% reduction in carbon and water footprint relative to the benchmark. In addition, certain sectors within AXAIM Company are excluded from all funds, such as controversial weapons, palm oil, tobacco products, and weapons manufacturers. It also does not invest in companies that violate the UN Global Compact. Now, that's part of the reason it finds itself on this list. Finally, AXAIM's reporting is of high quality, including a tool for visualizing the ESG scores of portfolios. Next up in line at number 2 is Impax Global Equity Opportunities Fund. This fund invests in companies that the managers believe will benefit from the transition to a more sustainable economy. A majority of its holdings are in Microsoft, which has the highest portfolio holding of 4.06%. And as I've always said here, Microsoft will never disappoint when it comes to consistent returns. Most of the stocks are concentrated on technology, with several investors coming from outside of the UK. Impax has the leader ratings on the Morningstar ESG commitment and is currently trading at an attractive $3.4. So, how does Impax identify suitable companies to invest in? Well, the Impax team primarily uses its own sustainability research at both corporate and industry levels. Negative screenings or exclusion criteria are not central to the strategy. In addition to this positive approach, ESG has been integrated into the entire investment process, and a wide range of ESG and non financial information is incorporated in Impax's 10-step corporate research process. The strategy benefits from a highly experienced, capable team of managers, Kirsten Morrison and David Winborn, who joined the fund in 2014 and 2015, respectively. Also, the team is closely involved in the fund house's strong active shareholders program. They are supported in this by a compact but experienced team of 7 ESG specialists. And finally, closing the countdown at number 1 is Stewart Investors Worldwide Sustainability Fund. This all cap strategy is led by Nick Edgerton, who is part of the Stewart Investors 12-member Sustainable Funds Group. The group is experienced, stable, and includes seasoned administrators such as David Gate and Sashi Reddy. All members fully integrate ESG research into their daily work, and at the time, ESG is embedded in all aspects of the investment approach. The team focuses on finding management teams with a shared vision of driving sustainable development in the markets in which they operate. A byproduct of this philosophy is that the strategy will not invest in companies with material exposure to harmful products. Such harmful products that the fund is against include weapons, tobacco, alcohol, fossil fuels, and gambling. Active share ownership is part of the toolset to improve the sustainability of the companies in which they invest. You'll never go wrong with trusting your investment with this team. This is because it exhibits a long history of dealing with companies and they are responsible for making all voting decisions. Important to note is that Edgerton is actively involved in the entire process. Stewart Investor has the Morningstar ESG commitment rating of a leader. The fund is currently trading at $418.9, which represents a 20% increase in value on a year-over-year basis. With just about a decade in business, Stewart Investor focuses on growth stocks that accumulate interest yearly. Now, if you enjoy investing in healthcare, then this is the right fund for you. This is because the largest share of its portfolio, representing over 30%, is reserved in healthcare stocks. It works better for long-term investors who are willing to invest for a minimum of 5 years. There you have it, guys, 3 sustainable global equity funds. And from what you've seen, choosing a suitable fund requires a keen analysis. Without analyzing well, you may end up with a poorly managed portfolio, which may lead to losses or low dividends. However, by choosing well, you end up smiling your way to the bank. What's your opinion on the top 3 sustainable global equity funds? Let us know in the comments section below. If you found this video enjoyable, make sure to leave a like and subscribe to this channel. Also, remember to turn on notifications to never miss out on any of our latest episodes. Thanks for watching, and I'll see you in the next episode.